Grants can help with your down payment and even your closing costs when buying a home. But most first-time homebuyers don't even know that they are available. Every state out there offers some type of down payment assistance. So today we are going to explore some options so that you can leverage the best grant programs available to you. So let's get right in it. The first programs that I want to explain are state-run programs. Now, almost every state has its own form of down payment assistance program. These are run by the housing finance agencies or other government organizations. They can be statewide, citywide, countywide, you get the gist. Now, with these state-run programs, there are two different types that you'd likely run into if you start exploring these. The first one would be grants and forgivable loans, and the second one would be repayable loans. So those grants and forgivable loans, those could essentially be at no cost to you, or they are forgiven after a certain amount of time. So an example of this would be if you got a forgivable loan for your down payment. So what that would look like is that you buy a house with this forgivable loan to cover your down payment. You're living in the house, you're not paying on that forgivable loan. But if you live in the house for the set duration of time for this loan, 3 years, 5 years, that loan will then be forgiven. So you've kind of been gifted this down payment in a form of down payment assistance. If you were to move or sell or refinance before that 3 or 5 year period, then you would have to pay back a prorated version of that down payment that was given to you. The other option is the repayable loans. Now, these are easier to qualify for compared to the grant and forgivable loans. So these are going to be more geared towards the moderate income earners. Now, how this works is that you would, in conjunction with your loan, let's say you're getting an FHA loan and you need a 3.5% down payment for that. In conjunction with that loan, you would get a secondary loan for your down payment, and you'd be paying on both of these loans at the same time. So you are financing your down payment, and usually that financing for the down payment also carries a low interest rate. And of course, the lender would make sure that you could comfortably cover both of those payments for each month. This is kind of the two ways that you would see the state-run programs available. For more information on these, you would want to contact your state's finance authority. The second option for some down payment assistance is the National Homebuyers Fund. This is a nationwide homebuyer assistance program that is meant to help both low and moderate income buyers. So how they do this is they provide grants for 3-year forgivable loans for first-time homebuyers. So we just kind of learned about what that forgivable loan looks like. It's not something that you're paying on during that 3 years, but once you reach that 3-year mark, it is forgiven. You could just move forward making your continued mortgage payments. Now, with this fund, you can receive up to 3 to 5% of your loan amount in that upfront assistance to go towards your down payment. Obviously, all of these programs are going to have some qualifications. So the qualifications for the National Homebuyers Fund are income limits based on the area that you are buying in, a 640 or higher credit score, a debt to income ratio of 45% or lower, and you have to use a NHF, National Homebuyer Fund, recognized lender. So these may be the lenders that are in your hometown or at your local banks. They just have to be recognized by NHF. And for more information on accessing their programs and applying for this fund, you would want to reference the National Homebuyers Fund website. Another option would be to look at grants from lenders. There are several private sector lenders out there that offer first-time home buyer grants. And these are honestly one of the things that I am constantly like, kind of frustrated that I didn't know about when I was buying my first home, because I would have totally used one of these grants. So what we have as some main examples that you may have heard of are the Navy Federal Credit Union Homebuyers Choice Loan. This is a 100% financing program, so you do not need a down payment. Of course, you might still need to cover your own closing costs. The second one, Chase Dreammaker Grant, that is up to $5,000 that you could potentially qualify for to help with closing costs and down payment. Of course, as I've made videos on before, the Bank of America Community Affordable Loan Solution, this would cover for eligible buyers the down payment and closing costs. And then there's also another program through Regions, which is the Regions Affordable 100. This is another form of 100% financing, so allowing you to buy with no down payment. And for this one, also no PMI or private mortgage insurance. There are grants out there from lenders that you might already even have an application in with that you may not know about. So don't be afraid to ask lenders that you're working with about these programs and what you may qualify for. Of course, just being a first-time homebuyer doesn't entitle you to some type of assistance, but depending on your financial situation, it might make sense. So it's definitely something to look into. If you want more information on specific loan programs like these that are private sector, let me know, because I have had several clients that I've personally helped buy their first house go through these programs, and I can definitely make more videos elaborating on these and breaking them down. Another option out there for you first-time homebuyers is the Chenoa Fund. This is a nationwide program offering down payment assistance specifically to first-time homebuyers. This is a 3-year silent forgivable loan. Just like we had talked about, you're not paying on this as you are paying your mortgage. So after that 3-year period with this one, it would be forgiven. So eligible buyers with this can receive up to 3.5% of the home's purchase price in assistance. So keep in mind that 3.5% is enough money to cover like a down payment on an FHA loan. But this is not also going to include covering your closing costs. For closing costs, as a first-time homebuyer, you're looking at probably around 3% of additional fees. That's going towards your title work. That's going towards lender fees that they might charge you for origination and processing, for, prorated taxes, all sorts of things that are bundled into closing costs. And just because you are getting some down payment assistance through this Chenoa Fund doesn't mean that those costs are covered as well. So you would need to have money saved up to cover those closing costs. The qualifications for this include income at or below 115% of the area median income wherever you are trying to buy a house. You would also have to have a 620 or higher credit score, a debt to income ratio of 45% or lower, and you would have to use a Chenoa approved lender. So for more information on the Chenoa Fund, you would want to reference their website to get started and read a little bit more to see if it'd be the right fit. Community Seconds is another option. So this is a Fannie Mae Community Seconds mortgage program that would cover your entire purchase cost as a first-time homebuyer. So this is not a grant. This is not a forgivable loan. This is a program that would cover the purchase of your house, the down payment, and the closing costs. So it's a little bit different in how it is structured. With this, you would be able to finance 105% of the home's purchase price. So what does that mean? That means that if your house, let's just say for easy math, appraised or, was worth $100,000, you'd be able to take out a loan for $105,000 and use that extra $5,000 or that additional, 5% to cover those additional costs. The qualifications for this include your income would have to be at or below 120% of the area median income. You'd have to have a 640 or higher credit score. And this needs to be combined with a Fannie Mae Home Ready loan. So you would also need to meet the qualifications to get that loan in order to bundle all of this together. Similarly, Freddie Mac has the Affordable Seconds, which is just like the Fannie Mae Community Seconds that we just talked about. This is another option that you have to finance 105% of the total home price that you are trying to buy. This must be paired with the Home Possible loan. So the Home Possible loan requires a 3% down payment. So it's a little bit lower than the 3.5% that you would experience on an FHA loan. The qualifications for this one are a little bit higher. Your income has to be at or below 120% of the area median income. For this one, you have to have a 660 or higher credit score. So a little bit different than the community seconds that we just talked about. Let's talk about one of my favorites and kind of one of the coolest but weirdest assistance programs out there, in my opinion. This is the Good Neighbor Next Door, which is a HUD-run program for law enforcement officers, teachers, firefighters, and emergency medical technicians. So in theory, this gives you 50% off. So a 50% discount off of the list price of a house that you are going to occupy as your primary residence for the next 3 years. And if that seems a little bit too good to be true, there's a lot of catches. So bear with me. The first thing is this must be paired with a Home Possible loan. Okay, that's not a big deal. But let's get into the major drawbacks. The first one is, in order to qualify for the discount, you must buy a HUD foreclosure property. So these are, I'm not saying that they're going to be in bad condition, because there's chances that they could be in good condition, but they may be a little rough. They may not be completely move-in ready. If you are in one of these career paths and you are looking for a fixer-upper, this may be a great way to get into that. In addition, this home must be in something that HUD has zoned as a revitalization area. You can find out more about those areas on their website. So between these two, what you would do is you would go on to the HUD website. They would show you a list based off of your state of homes that are available and eligible for this program. Then you would kind of submit your information as being interested in purchasing one. Another catch comes in because if there is more than one person who qualifies and has showed interest in a property, then they are going to randomly choose someone to buy the house and to start working through the process. So there are a lot of hoops to jump through, but if you have the patience to jump through them, 50% off is huge. And that can definitely get you a pretty decent home for a pretty steep discount. So not so bad overall. It is very, very important to weigh the pros and cons of using any type of assistance program. In most cases, these can expedite your journey to homeownership, but you still need to make sure that you are ready. Make sure that you have enough money to cover your closing costs. Make sure that you have an emergency fund, because there is not going to be a maintenance team that you can call when you buy your first house. So you do need to make sure that you are still setting yourself up for success and not setting yourself up for a scary financial situation. If you have any questions about these heading into 2023, let me know in the comments below. I can definitely talk more about grant programs and down payment assistance in future videos. As well, if you are ready to jump into the home buying process, there is a link in my bio where I can help get you connected with a great agent in your area to help guide you through this process. Once again, I'm Nicole, Arkansas real estate broker, with videos to help you find your way home, and I will see you in the next one.